Hello traders, and welcome to another weekly market forecast video. Hopefully everybody has been having a great weekend. And as we have expected last week, the market has overall moved as we have been explaining over the previous weekend's market forecast video. So let's start as we usually do with the dollar index. We can still see that the market is trading lower as we have been expecting. We can see over here within this week potentially some more downside towards the 101 or so area. And from there, we can expect soon to see some sort of reaction possibly in the coming weeks. But for next week, the way the market has closed, we can still see potentially a little bit more downside to go. But of course, it could also be a very sideways to lower move. We are approaching the week before the end of the month, so anything to do with currencies will be making a move before a reaction in the coming month of September overall. So in general, more downside is very highly likely in the dollar index in this week ahead. For the dollar yen, we have reached the Fibonacci extension area over here on Friday. As we have explained, after a bounce, we need to see another move to the downside in the dollar yen. So this is the move that we can expect to see within this week, entering the last week of August. So this one will either retest the lows or make one more low. This will remain to be seen in the next week or two. So the next move, reaction to the downside for the dollar yen. For the euro dollar, as expected, we explained last week that we wanted to see a move to the upside because we have a target area to reach. So the euro dollar is trading within the cycle from 1st of August, and it should ideally hit this target area before we might see any reaction. So more upside short term for the euro dollar is highly probable to take place. For the pound dollar, we have got the reaction as we have expected over the last week or so. The market has moved more than 200 pips in this move to the upside. So from here, we can still see more upside to take place, potentially retesting the highs from 17th of July. It remains to be seen whether we are capable to break them or not at this stage, but more upside short term as well we can expect in the pound dollar. And from then we can expect later possible a reaction. Now, if you want to know the bigger picture in all of these instruments that we share here for the public on YouTube, feel free to check us out with the link in the description. If you are serious about learning how to trade, we have a membership. You can become part of it, and ideally the premium plan, which will allow you to benefit from 4 weekly live sessions, Monday to Thursday. We go in detail and we explain to you which are the best instruments to look for trades in the specific month or the quarter ahead. We explain the areas and we explain why most of the probabilities are hinting towards a direction. And it's not something that you have seen before. It's something that we do unique based on our experience over the years and the way that we have seen the market. And it's something that should definitely give you an edge as a trader, and do not repeat the mistakes that 95% of retail traders are doing. So it's up to you whether you want to check us out. The link is in the description. So for the pound dollar, more upside short term can be seen, and from there we see what happens next. For the pound yen, we have got this bounce to the upside as we expected over the last 2 weeks. Now we are very soon to get the reaction to the downside, and ideally from there the market can have another move to the upside. So this is the structure that we can see ahead for the pound yen for the next coming weeks, I would say. But first, this move to the downside should take place before anything else. So the next bigger move is to the downside, but for us this is not the ideal instrument to trade at the moment. There are better setups in the market coming ahead. So as I said before, if you want to stay properly informed, you can benefit from becoming a member and see from yourself how we can help you out. Also, we have our Trustpilot page in the description, so you can see a few of our members what they have to say, so you can draw your own conclusions. And if you have any questions, send us an email at support@roiforecast.com, and we will get back to you within the day. The EURUSD, this is something we have explained to our members after this overreaction moved to the upside with a high on the 5th of August. We have explained how from here we can see a bigger reaction to the downside, which is what we are looking at the moment. Potentially more downside we can see within the coming week or so. Then we will consolidate to the upside, and then something interesting can take place. Of course, if you want to know the bigger picture of the EURUSD, again, this is only accessible to our members. You can join and check it out yourselves. So short term, a little bit more downside in this pair before we can consolidate to the upside later on. But this specific instrument in the bigger picture is much more interesting if you want to figure it out, and this is something that could give you in the coming months some very good pips, I would say, in a trade possible trade scenario. So you are welcome to join us and see what we have to share for the next quarter of trading to end 2024. Now for gold, we have been actually explaining to our members since the lows from May. Down here, we have been explaining that this was a very big buying area for the buyers and how they were accumulating towards this 2,300 area. And we have been explaining to them for every dip in the market, it will be a buying opportunity. The market kept making higher highs. Any pullback you have seen, it was bought, so buyers are in control. And as we have been explaining for a long time for gold, all-time highs has been seen, especially this Friday. They broke the highs from 17th of July, and most probably the highest probability chances we have been expecting in the last few weeks. The market has a target area up here to reach within this Fibonacci extension area before buyers can take some profits. So ideally, this is the week that we need to see gold continuing sideways to higher towards this area above 2,550, and from there we can see what happens next. Now for oil, we have expected this bounce to take place, then we have seen a reaction, and what can happen from here is going to be possibly a choppy price action. Potentially another bounce to the upside can take place, and then we see what happens. Still in the bigger picture for us, oil should be trading lower. So this is the highest probability chance move we can see next. But of course, there is an alternative picture to that for the short term before it trades lower. So it can also do a double correction to the upside if it wants to. So the bigger picture for oil, you can check us out if you become a member. We share it in our daily live sessions as well, and the weekend's market overview, which is only for the members. If you are interested to see the bigger picture, is very interesting as well. Not only if you are trying to trade it, it's also interesting for you to understand the broader financial market and economical outlook for the next coming months and why it's very relevant also to other things, not only trading. So you stay educated, and with better education you will become also a better trader as well. So for oil, a little bit correction can take place next week, and then most probably more downside. This is the overall view that we have at this point. For the SPX S&P 500 cash index, we have expected to see this reaction to the upside, which is exactly what happened over the last week or so. From here, we should be expecting to see some sort of reaction sometime within the week, and then possibly another move to the upside can take place. It remains to be seen whether we can print new all-time highs or not. It doesn't matter, because after this pullback and move to the upside, we should be expecting a reaction to the downside next. So this will be our bias in the S&P 500 into the next 2 to 3 weeks ahead. More upside short term, but then it should be followed up by a decent sort of a pullback before anything else happens. And as well as with this one, if you are curious to find out the weekly or monthly time frame analysis, the bigger picture, become a member. The link is in the description. This will save you a lot of analysis and understanding on what you should be expecting and how we see the market and why. We will give you all the reasoning behind our analysis because everything that we do is based on a multi-factor analysis. We use a lot of ratios, indicators, not technical indicators, something that most people they don't know because as I said before, if you want to be part of the 5% of winning retail traders, you need to do things differently, and this is what we do here at roiforecast.com. Our service is still on a third-party website, buymeacoffee.com. The link is in the description. We will soon launch as well our own website, which is something that we have delayed purposefully because we want to make sure we have a clear plan as to how things will be developed within the website itself. It should be very interactive for all of our members. So this is what we need to figure out first before we officially launch the website. But regardless of the case, we have everything set up for you. If you become a member, you will receive everything. Everything is recorded. So if you want to check out any of our past analysis, you can do so. A reason why we don't really bother to share a lot of befores and afters is because we really don't have the time. There are so many forecasts that we have done since March that we have launched the service, but we do not see the need that we keep telling you, look how what we forecasted. We are not really want to show off. Our members, they stick to us for a reason since the beginning. So you can check us out and see from yourself. Also in the daily live sessions, you can ask any question. We will answer it to you on real time. And this is how we like to interact with you and help you on your own individual journey because not everyone trades the same way or the same, let's say, capital. So it's very important that you know that you can be accommodated despite of your scenario. So for S&P 500, what we can see, small pullback, another push to the upside. We don't know whether it's going to make new all-time high or not, but after these moves, we should expect a reaction to the downside first. And of course, concluding our weekly forecast with the two ETFs that we share, the 3Qs and GDX. The 3Qs, they are very similar to the S&P. We can expect some pullback this week and another push to the upside, and then a reaction to the downside can take place next. This will be the outlook. And for the GDX, we are on our way to new highs above the 17th of July, very similarly to the one from gold. So the 40 to 42 area should be our target area before we can see a reaction in the GDX as well. So with that note, guys, thank you so much for watching. If you are new here, please consider subscribing. Don't forget to leave us a like because this really helps us to get our content to more traders out there to help them out. And what we like to say is that this is important for our development as well. We try to help out as many traders as possible because unfortunately 95% are losing money over the course of the long term, which is anything above 3 months and so on. So as we said before, the most important thing, you need to have consistency in trading. The people that tell you that trading is not consistent is because they don't understand the market. If you want to become consistent, consider becoming part of our community and you will see what we do differently, and many things that you thought that you were doing right, you are doing them wrong. And if you fix that, this is totally up to you, and this will allow you to unlock your potential path for success in trading. And see you in the next video. Enjoy the rest of your weekend. Take care.